Hello traders, this is Brian from FinancialTradingJournal.com, and today is Saturday, September 7th, 2013, and welcome back to this week's FX Weekly Analysis. In comparison to last week, which was the last week of August and the last week of the summer, this week was fairly active, considering we had NFP on Friday and several news announcements throughout the week as well that were fairly important, especially for the pound dollar, or I should say the pound in general. But most charts, if you focus on the weekly charts, this week had a bigger bar than last week, so that's what I'm trying to get across. The only slow pair, if I recall correctly, was the euro, which we mostly consolidated in the 1.32 area, which I mentioned last week was a support region. So that's all I wanted to say for now. Let's get started on the FX analysis. Starting up, we have the dollar CAD first, as usual. The lines, for the most part, on all the charts are pretty much all the same. The only lines that changed, I believe, were on the euro dollar chart because that formed the new channel. The rest of them were all still in the same channel. So dollar CAD, we're still in this upward weekly channel. We did pull back this week. I mentioned last week that we were at resistance up here. We were approaching the 1.06 area, but we couldn't get there. I think the high was 1.055, which is around a sell area as well. We pulled back this week. On the weekly chart, we're still above the bottom trend line, but when we switch to the daily chart, we're almost really close to the daily trend line. That's all I have to say for the monthly chart. Weekly chart, just a reminder from last week, are the possible levels for extension are the 127 and the 161.8. Those are possible targets. In the upside, we're targeting the 1.07 and 1.08 areas. The black lines up here and the magenta lines up here, those are the targets so far. But this move was primarily due to NFP yesterday. We had horrible US data, so I think employment only changed by 150,000, something like that. But the forecast was around 170, 180, so it didn't beat forecast, so that's why it reacted as such. All the pairs were moving against the dollar, and dollar weakened across the board. But I don't think that affects the overall trend. The overall trend, this was just a one-day knee-jerk reaction because the bigger news that's coming up in the next couple weeks is when the Fed starts to taper. If they do start to taper, then that's U.S. strength across the board, and the U.S. dollar will strengthen across the board over the next several weeks. So we're waiting for that to unfold now. That's all I have to say for the weekly chart. Daily charts, this is what I'm talking about. This daily trend line right here, this aqua line, we were pretty close to it. I'd say we were about 20 pips away from the bottom, so fairly close, and we did start to bounce slightly. Didn't bounce that much yet because obviously the day was almost over. NFP was a big move of the day, as you can see. This is a daily chart for Friday, so that was a big move down in comparison to the previous days where we consolidated up there. NFP pushed it down. So there's not much juice left in the markets, if you will, to move the markets back up off of the trend line. We'll probably do that next week if we do bounce from here. And a good reason for the bounce is on the 4-hour chart. What you'll notice is we have a pin bar candlestick right here. This candle right here, that's a hammer. It's not an ideal hammer because the body is only about a third of the candle and the wick is 2/3 of the candle. That's still okay, but typically you want the body to be about 20%. That way you have a really small body and a really long wick, so that's a perfect hammer. This is an okay hammer, but as I mentioned, we didn't get close to the bottom trend line. So ideally we want price to go back down, test this one somewhere around here, this trend line. And if you were to draw a line, actually, if you were to draw a little support area, this would be probably an area to look at. Based on this resistance here, this could be support. So this level will probably get tested sometime next week, and then we bounce up. Going up, though, we have this area from before. This is a gap, as I mentioned, from way back here, but we didn't pay attention to that on the way down because NFP just wiped it out. So maybe it will come into contention next week, maybe not. If not, then we just go straight up through that area and start targeting those magenta lines and black lines up there at 1.07 and 1.08. So that's all I have for the dollar CAD. Up next, we have the Aussie dollar. Aussie dollar, as you can see on the monthly chart, we had, as I mentioned, we had the dollar strength was weakening, so obviously huge reaction here on the Aussie, all things considered, especially since we dropped so much on the Aussie dollar in the past several months. It's not weird to see a bigger reaction based on US weakness to push this one up. So there's nothing else to say there. But now the only question I have for you and something to keep in mind is, are we going to repeat what we saw in the last 2 months? As you notice, in the last 2 monthly candles, these had huge upper wicks. So that means at one point in time, the bar was green and then it turned red after something happened. So right now we have a green candle, but are we going to form an upper wick, which means this one would turn into a red candle, which would mean we would have this whole bar right now, it would be a wick, and below we would have a candle. So is that going to happen? That's something to keep in mind for the next coming weeks. Weekly chart, there's not much interesting to say. I guess we do have sort of an engulfing candle in the sense of this is the first green engulfing candles compared to the previous weeks. Last week we had a small red candle. This green candle engulfed the whole thing. Technically it's not perfect though, because engulfing would mean it covers the bottom all the way to the top. This one, it kind of jumped, gapped up a little bit, and then covered the rest of the way. So, but overall, all in all though, this is a pretty big green candle compared to the previous week. So that's somewhat a bullish sign, but we haven't broken resistance yet. As you'll see on the daily chart, what I have drawn are yellow regions. The yellow region down here, this is the previous support as I drew from last week. That one we didn't really test it. Like we did bounce though. I think last week we were down here right at the bottom, and then we bounced off of it at the start of the week. For this coming week coming up, we have two areas on the top here. We have the 0.92 area, so this is the first yellow region, and then the 0.93 area, and that's the next yellow region. These two regions are resistance. If we break that, then we'll be targeting the 95, 96 up there. But if not, this could contain price down here, and then we could retest the 0.89 area for support before deciding which direction to go. One last note is we're currently at the top of the daily trend line right here, so we're near the top. I adjusted it slightly, so we're at the top right now. Yeah, so it has to, in order to get to the two yellow regions above. Well, if you count this one, the 3-2, we're technically already there. We hit 3-2, I believe, on Friday, somewhere around afternoon time, after NFP came out. We hovered around there for a bit, and then we went down. I'll just check on the 4-hour chart. So 4-hour chart, so as you can see, the yellow regions right here, the trend line's right there. We did hit, I believe the high was 2-1, so 0.921. That was a high. So up there, it did hit. It started to puncture the yellow region, and it's along with the trend line, and it started to go down. Next week, I don't know. If you look at these two peaks right here, we don't go down right away. It goes up and then comes down, and then goes up and tests again, and then going down. So possibly it might go down to here and then go up again, and then we see what happens. And then maybe it breaks, maybe it doesn't break, because in order to go up, we have to break this aqua trend line, this yellow region, plus the region up there before going up anymore. So that's all I have for the Aussie dollar. Up next we have the euro dollar. Euro dollar, first thing I want to bring your attention to is I currently have two sell positions, as you can notice right here. It says sell 0.5. I actually have two of them, so I'm short one standard lot right now. Normally, for those of you that use MT4, there will be a dotted line across, but I took that out because that's annoying to do the forecast on. I'll put it back in after I cover the 4-hour chart, just so you guys know where I entered. So just keep that in mind. So I might be biased in what I talk about for this pair, and I plan to take shorts on pound dollar as well, so I might be biased for these two pairs. But anyways, for the monthly chart, there's not much developing here on the euro dollar monthly chart. As I mentioned last month, we had this pin bar, which was relatively at the top of the consolidation zone. So this month, we might follow through to go back down. That was a message entering this month. So now let's see what happens as we go in deeper. So on the weekly chart, I mentioned last week we had this descending triangle formation. We broke out and price went back down. Question was, do we bounce off of it to go upwards, or do we break downwards? In this case, this week, what happened was we broke down, and then we also went back up to test it, because that was NFP though. That was a news reaction, but it wasn't a technical reaction. So now, if I remove this line for a minute, you'll notice that this weekly candle is actually a pin bar. So this is kind of a conflicting signal because this pin bar is actually in support region. As I mentioned last week, the 1.32 region is support, and when I go to the 4-hour or daily chart, you'll notice I have the yellow region. And the thing is that this pin bar is under that yellow region. So we broke support, went back up, and now we have a pin bar, but we're below the support. So what does that mean from a technical standpoint? So technically speaking, it should go down because it already broke support and it didn't close above support. Yes, this is a weekly bullish candle, but it closed below support, so that's bad. So that's a conflicting signal. So when that happens, usually you rely on shorter term time frames than longer term. So on the weekly chart, it looks like it might go back up, but on a 4-hour or daily chart, it broke support, it closed below support, and it right now it's retracing up actually. So that's what I'm going to get into on the daily chart. So daily chart, what I have drawn here is this new channel, and this is the yellow region I'm talking about. So as you can see, in the past couple of days we went down, and then the first time we hit the yellow region, we bounced up green. We couldn't close above it. We went right back down through it, and then this is a pullback retrace. So you see how a red bar went down, and then green bar. So the red bar broke support, it closed below support, green bar retraced back up to the support, which should become resistance now, and that's why I entered. So I'm going to put my lines back on my entry so you can see where I entered. So the dotted lines represents my entry, and based on this chart, it might look like I entered right at the end of the day because it's at the tip of that green candle, but actually that was not the case. If we look on the 4-hour chart, first thing you'll notice is, this green candle right here, this is right when NFP came out. This red doji right here, NFP came out, it spiked down a little bit and then went all the way back up to there. That's when I got my entries. So you notice that my two lines were pretty much right near the top of that red doji, and then went right back down. As soon as it went down to here between the tip, which I believe was around the 80 area, down to here, which was around 30, so that's about 50 pips, I closed out half my position and I re-entered it towards the end of the day because I knew with the doji it's going to retrace pretty much no matter what, because after NFP that happens, it's definitely going to retest the levels. So I got a small scalp the first time, but this time I'm building positions because, as I already mentioned, we broke below support, and this one closed below support. We went back up. This is a retrace. This is a pretty perfect entry from a price action point of view, and we're right at where I entered actually. So for those of you that are watching this, you guys, if you want to consider taking a trade, this is a pretty decent region to take a short, but obviously be careful. Your stop loss, if you guys are taking this, would be somewhere above the yellow region, so somewhere here. So be conservative. I mean, my signals aren't 100% on these FX weekly analysis. If you go back throughout the past 2 years, my track record for FX weekly analysis is around, I think, 60 to or 65 to 75, 80%, something like that. But like, you can't really gauge my calls like a signal provider, because if I'm wrong, I could be wrong by 800 pips. If I'm right, I could be right by 50 pips or right by 200 pips. Forex is different from actual signals. So based on entry and exit, that's all up to you. But general direction wise, I think it's going to go down based on price action. So that's all I have for the euro dollar. Lastly, we have the pound dollar. So as far as the monthly chart goes, there's nothing really new here. We had this weekly channel from before. We're currently testing the upper trend line, so possibly we're looking to go down in the next couple of weeks, which is why I mentioned earlier I plan to short pound dollar up there. So if we can get to the 5.7, 5.75, even the 5.8 area, that's all potential sell area. When we get to the other time frames, I'll draw a rectangle of potential good entries for the coming week. So that's all I have to say for the monthly chart. Weekly chart, just a better version of the monthly chart. As you can see, we are pretty damn close to the high there. As I mentioned, my sell orders was around 5.7, 5.75. The high, I believe, was 5.68. So it was, 20 pips away from my entry. So obviously I didn't execute my order. So I'm still waiting for my entry. We'll see what happens next week. Maybe it'll go back up again to test the 5.7, because that is the level. So it's the levels kind of act as a magnet. So it's going to attract it to the 5.7. If it gets there, I'll enter. If it gets to the 5.75, another potential entry. The highest I can see it go is maybe the 5.8, 5.85, because I mentioned previously extension levels 127 and 161.1 are up at the 5.8 and 5.9 region. So I mean, I don't think it's going to get there though, because we are really close to US tapering. So if US tapering does happen, then it's gonna for sure just go straight down in the next coming weeks. But 5.7, 5.75, that would be a pretty safe risk zone. But you need to take into consideration that I already shorted this once. As I mentioned last week in last week's FX Weekly Analysis, I shorted from 5.7 to 5.475. So I already made 225 pips on this pair. So even if I lose on this next trade, my last trade covers this one. So I'm in a different position from you guys. If you guys didn't short it last week, you guys don't have profits to lose. If I lose this next trade, I just lose profits. I don't lose capital. That's the main difference between me and you guys. So keep that in mind. So that's why I'm willing to short up to the 5.8 level, even if it surpasses 5.7 or 5.75. So we're in different positions. So just keep that in mind if you plan to trade cable next week. So on the daily chart, you'll see that we have not broken the upper channel yet. This upward channel, look, it's still going up. This red trend line still intact. We never tested the 5.4 support here, 5.42 support that I drew last week. That didn't happen. Right now we're approaching the weekly trend line, so that's the potential sell target, the 5.7 level. If the channels continue up, then obviously you're gonna have levels somewhere up there. You're gonna have levels at the 5.8 and 5.9 level up there. Potentially 5.75 is over there. So this whole region up here is sell. So if we switch to the 4-hour chart, what I have drawn is this rectangle right here. We had trouble getting above it this week. So as you can see, I think this was on Wednesday we tried, Thursday we tried, Friday we tried, didn't work. We went up, doesn't really work. So short term we have resistance on the upside, but I still like my 5.7 entry. If it gets up there, then I'm gonna short. Even if I short now, that's technically just a pullback, because I shorted from, if I were to draw a line, I went from here, 5.7, I went all the way down to, I think I exited somewhere in this neighborhood like that. So I got this move, and if I get into here, this is just a pullback entry for me. So I'm still winning if I enter here. But ideally, I like to wait up to there, because that's the highest probability up there. This is mid probability. So because if you were to enter now, and this is why I advise you not to enter now, but if you miss it, then that's kind of, you missed the train kind of thing. But if you enter now, this is 5.630. Your potential drawdown is 100 pips or so, depending on how high it goes. So it's better to enter up there at the 5.7. 5.7, that's when you should start looking for short entries on the pound dollar. That's when I'm going to start looking. Going forwards, we want to break this red line, and then we want to break the yellow line, the yellow region down here. So that's pretty much all I have for this week's FX Weekly Analysis. If you guys do plan to take my euro dollar short or pound dollar short, be careful. Make sure you set your stop losses. Make sure you do all your risk yourself. Don't blame me, obviously. So that's it for this week's FX Weekly Analysis. Hope you guys enjoyed it, and I will see you guys next week.